My name's David Crowter. I'm Head of Private Client Services here at Carpenter Box. And I'm just going to spend a few minutes giving you a reaction to yesterday's budget. My reaction is, goodness gracious, there's a huge amount of content for us to digest. You'll find a lot more information at carpenterbox.com. There are a couple of points I did want to highlight in particular related to yesterday's budget, and they are some seismic changes to the scope of inheritance tax. The first one is IHT and pensions. For many years, pensions have been outside of people's estate for inheritance tax purposes, but from April of 2027, they will be within the charge to inheritance tax. We spend a lot of time, doing some pension planning for people with the intention of driving a lot of assets and value into pension schemes because we like the IHT-free nature of pension schemes. We're now having to revisit some of those things, and I think, is it necessary to now draw money out of your pension scheme as priority to the consumption of other assets, for example, in a way that wasn't the case prior to the budget. So there's some important thinking that needs to be done for clients who've got significant pension savings. The other big change, huge change actually, is relating to inheritance tax and businesses. So again, previously there'd been 100% relief for inheritance tax for business owners. But from April of 2026, that relief will be only IHT relief for £1 million worth of assets. Thereafter, the relief will be effective IHT rate of 20%. So for many, many years, people who own businesses didn't need to be overly concerned around inheritance tax because the IHT was, in a lot of cases, zero. But actually, if IHT is going to be applied to those businesses, we've got to think about what we do now. For example, how the IHT is going to be funded, particularly if most of the value is in that business rather than outside. Something that hasn't changed is CGT reliefs for lifetime gifting. So it may well be that we've got to look at those approaches for some clients to sort of move that value away from their estate at an earlier time. Other big change actually is around capital gains tax. So there are no changes to residential rates of capital gains tax, but for other assets, the higher tax rate has gone from 20 to 24%. So that was lower than some people might have feared, but that's applying from yesterday for sales after the budget day. On or after the budget day. The other change as well that's coming in from April of next year is an up rating of capital gains tax. So at the moment, you've got a 10% rate of CGT for disposals which qualify for something called business asset disposal relief. That is now going up to 14% from April and 18% the following year. So if you're looking at selling your business in the future, there's a higher rate of CGT that would apply to it. So huge budget, huge amounts of content that we all need to digest carefully. And I think, there's a sea change, I think, in a lot of the planning that we might be doing for clients. Obviously, for clients who are primarily investment related, there are a lot of solutions that we're deploying for clients at the moment. And I think actually what we're going to be doing is looking to incorporate those solutions within a lot of people who run their businesses. So if you're going to be affected, please get in touch because I think we've got a lot of things that we can help you with. Thanks very much.